Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros, for Friday, February 28th, 2025, rolling out the month of February here with some selling. We're going to talk all about it. It was a doozy of a week out there. If it's your first time joining us, welcome. Thanks for being here. This is the show where we break down all of the notable moves across financial markets, and there are lots of things to note this week. So stick around. If you're not subscribed to the channel, do subscribe. It'll keep you up to date every single weekend with all of the latest you need to be paying attention to. Let's get into this week's sell-off here. For the first time in a while, we finally got some consistent selling that really did not let up until Friday, where we finally got some relief. But this sell-off was really concentrated in technology and even more specifically, the momentum factor, which sort of stretches across different industries. Think AI, think crypto, think just tech broadly. You also have data center plays, power plays. The things that have been working in this market really sort of did a 180, unwound, selling begot more selling, and we saw lots of kind of fierce rotation this week. There were plenty of things that worked, but the biggest areas of this market, you can throw Mag 7 in there too, saw some of the most aggressive selling we've seen in some time. Now, lots of reasons to sort of get that ball rolling. I think, we have just softer, weaker econ data, which is getting folks a little bit scared about the growth prospects. We have continued uncertainty here with tariffs and policy and trade deals. These are all kind of up in the air where the market is struggling to figure out where things are going to land. President Trump seems to be moving forward on the March 4th 25% tariff deadline. So we'll see if that changes or gets extended, but that's a concern. We have a government shutdown, which could be looming here in the next couple of weeks. And then, of course, we had NVIDIA earnings, and those earnings were great, but they were not great enough to appease the market, right? We still sold off after good earnings out of NVIDIA, which really speaks volumes to kind of where we are sentiment-wise, valuation-wise, and then just that macro situation. So notably, though, we did have sentiment readings. You could look at put call ratios, but even if you look at like the AAI investor surveys, they are at some of the most bearish readings we've seen in years, which is pretty remarkable given the fact last week we were at all-time highs in this market, which is pretty mind-blowing, but goes and speaks volumes to the sentiment of where things are right now. There are plenty of moves to talk about today. Let's get right into the charts. Before we do, I do want to shout out our sponsor, Investors Business Daily. They make this show possible. We've got links in the description of this video. We've got some discounts to some products and some introductory offers. Check it out with a link in the description of this video. And now let's get into today's episode. All right, here we go. We've got Warden TC2000. This is a charting platform we're using throughout this video. It's a platform we support here at The Trade Risk. We've got tons of downloads available at thetraderisk.com. So check it out if you're looking for a new active trader platform. TC2000 is a great one. We've got links in the description of the show or head to thetraderisk.com. Let's get into the data here. We got plenty to cover. 1 week returns. Take a look at this. We've got the Dow that finished green this week, which certainly does not tell the story of a lot of the carnage that was out there, but that was green by 1%. That is notable. S&P down 1%, NASDAQ down 3.4%, telling a little bit more of the story right there. If we take a look at volatility, you can see the VIX going into the weekend here at 19.63. Now, let's look at the sectors here. And again, when you look at this overview in isolation, you'd say, wow, this doesn't feel like it was a heavy selling week because you have financials, you have real estate, you have healthcare that were all up 2 or more percent. But technology down here at the bottom, you have to understand, is the heaviest weighting across all of the market cap weighted indices. So if you don't have technology working, or even worse, if you've got tech down 4%, you are certainly going to feel that that underneath the hood. So tech was down 4%, followed by utilities and consumer discretionary. Now, if we take a look at our sector trends, I mean, we have lots of kind of mixed signals here. You'll notice that we've got lots of yellow dots being printed. This is our indicator that's available for TC2000. We also have this available for download for TradingView users. Measures price volume spanning across time, has some price action relationships, basically a smoother way to sort of trend follow and understand path of least resistance. I'll let you look through the charts here this week, but there wasn't a tremendous amount of change. Real estate, for instance, was green coming into the week, ended the week green. You know, industrials was kind of flipping down coming into the week. Discretionary flipping down coming into the week. They ended the week green and red, and then everything else kind of followed the same. So staples, real estate, you know, these are the things, healthcare, that are working right now to the upside. Let's take a quick peek here at our relative strength factors. I do want to show this one here. So this is a handful of different ratio charts of a layout that we have here available again on the traderist.com. But if we take a look at this ratio chart here, I think this speaks volumes to what kind of occurred this week underneath the hood. This is basically high beta versus low beta in terms of a ratio chart. And it just basically kind of shows you, it's noisy at times, but kind of flips to just show you what's the prevailing sort of trade or trend in the market. And this week we saw just a big kind of flush down lower here for high beta stocks. And that again speaks to really what happened here underneath the hood. If we take a look at market breadth, it wasn't too pretty here for the bulls. Again, maybe not as bad as one might expect, but really if we're looking at our favorite market internal metric, which is very simply 52-week highs and lows, you can see that lows are gaining steam right now underneath the surface. So there are more stocks creeping up to 52-week lows than there are stocks hitting 52-week highs. That ratio is still very unfavorable. That's kind of been the case here, and it doesn't seem to be improving, at least at this time. Now, one other notable stat here, when we think about the sell-off, the bearish sentiment, the magnitude of selling, right? Because I think you're going to see a lot of that this weekend when you're doing homework research. And it's a lot of the well-known stocks and the widely owned retail stocks that got flushed out this week. But when we look at something like a short-term breadth metric, which is simply looking at the percentage of stocks at 1 month lows. So how many stocks are making 1 month lows? And so when we look at these readings across, just ignore the highs here. If we look at the 1 month lows across the S&P, the Qs, and the Russell 2000 this week, right? Despite the fact that, again, Friday we rebound, but even coming into Friday, these were all very subdued, not washout readings that we saw in all of the indices. The Russell 2000 was the closest to getting close to a sort of a short-term washout level. But even that didn't even get beyond 35% of stocks at 1 month lows. So again, it speaks to the kind of heavyweight and concentrated tech that really felt the pain this week. If we take a look at our macro slide here, you can see that the dollar index floating higher, catching a bid this week, kind of putting in a higher, not really a higher low, but putting in a pivot low. But the 10-year treasury yield continues to roll over here. And we're still seeing, again, kind of at this point, I would say a flight to safety, a flight of growth scare is kind of forcing folks now into the 10-year treasury as kind of the safest, clearest place to park their cash right now. It's a total 180. It's not exactly the picture that I had in my head 2 weeks ago. If you were to told me, you know, markets were going to be down, you know, 3-4%, 5% from their highs, I would have expected that, you know, inflation was perhaps the story here that was starting to get yields to creep up, but that's not the case. We're seeing lower 10-year treasury yields, which will have an effect and will help probably down the line if they can stay down here. So that was notable. If we take a look at commodities this week, big story was really Bitcoin. Again, parked with that momentum cluster was down 11%, down 20%, nearly 20% over the past month. So let's talk about that in just a little bit. Now, before we do, let's kick it off with our big heavyweight market weighted indices here. We're going to start it off with the S&P 500. Here is the usual grid that we're looking at. We're going to look at this view first. So a couple of things that stands out here for the S&P 500. Last week, we were at all-time highs. Things looked pretty good. This week, we're at the lower end of a 2-month range. So things changed pretty dramatically, throughout this week. We did get a gap fill, which was nice to see. I'll switch it over to the SPY because it's just a little cleaner here. But the SPY finally filled this gap from early mid-January, which we didn't quite fill at the start of February. So that was nice to see, a little target, little gap fill for everybody that likes to check mark those boxes. So that was good to see on Friday. Notice Friday's reversal. Look at the volume that came in on Friday. Look at the range of this candle and the attempt to kind of trade lower at the start of Friday and then the reversal and close strong. We almost negated all of Thursday's selling. Now, there were a couple of perhaps helpful, beneficial one-time effects. It was the end of the month. I know there were lots of rebalances and programs kind of running in that last hour or so of trading that may have exacerbated kind of the move that we saw at the end of the day. I don't necessarily think we are out of the woods and the worst is behind us. I think we have breathing room. We have levels to trade against now. And I think we do have a little pivot low to work with, but I don't necessarily say that we are out of, the all signs are clear type of situation. I think the fact of the matter is the S&P 500 saw, basically 5 days down in a row. I know there was a slight green day in here, but basically, we went in a straight line down over 4% in the S&P 500. And if you include the low from Friday here, you're really talking 5% in a straight line, call it in 5 days. So we were oversold on lots of traditional metrics. We filled some gaps. We came down to prior support and we reversed on Friday. Now, again, we did have some of those rebalance flows into the end of the month, but it was still an impressive turnaround given the fact we have so much uncertainty, given the fact we had such a contentious geopolitical with President Zelensky in the Oval Office with President Trump. That was a very sour note to leave this market with after an already painful kind of week of headlines. And so the fact that markets did stage such a big bounce is at least a little bit telling and kind of speaks back to some of those overly pessimistic or multi-year high bearish sentiment that we see right now in the market. Kind of speaks to this cocktail of very mixed signal, short-term trading, active trading type of market. I think the cues, though, if we take a look at this, speaks and tells a very nice story here. So if we look at a weekly chart of the NASDAQ 100, again, last week we were making highs up here. Let's just go to a daily chart. We were briefly making all-time highs in the NASDAQ 100. We got up there, right? Last week, we talked about, kind of the uncertainty here. We did reject on Friday's video. We talked about, is this time different? Are we going to find follow through, right? We talked about losing this level. So it was something we needed to pay attention to for follow through selling, which had been really hard to come by. Well, it came this time. And so when we look at the NASDAQ 100, we again dropped basically throughout the entire week. This was more like an 8% drop from high to low so far. And if we draw a kind of a, level where we found some support in January, we really did get a bit of a rejection here at the lows. So this market is quite kind of mean reverting and playing in this range where it failed to break out at highs and we saw a fast move down. And as we got down to the lower end of this range, once again on Friday, we did find some support. Market reversed, but it was just underneath this January kind of pivot low, and then the market reversed back up. So when we look here at the NASDAQ 100, there's been, short-term technical damage, but longer-term technical damage, not really, not yet, right? We're still range bound. Buyers stepped in exactly where they needed to. So that was encouraging. Notice the volume that came in this week. Notice the turnaround here. We've got levels to trade against if we're active here. Maybe we get kind of a multi-day bounce to start next week. And then we're going to need to really kind of gauge where things are going to go from there in terms of flows. I know we're not historically seasonally in a strong period in the market, so we're going to have to take this day by day. I think you've got clear levels to work against right now. The lows from Friday are going to be very important to measure and manage risk against. But if we continue to stay above these levels, then we have a tradable kind of pivot low to work with. If we start losing, call it 500, 495, all bets are off, and we are going to be susceptible or open to a much larger correction. If all of this range over the last 3 months becomes kind of bag holders up top and this market decides to break down and flush below 500, then we have to look out below. We have to look at the 10% plus correction levels, and we have to start looking at some of these prior, kind of November, October lows. Notice, on a weekly chart here for the Qs, a 10% correction would bring us down to, approximately 485. So we almost got there at the lows on Friday, but a 10% correction, down around 485. If you start to say, okay, well, maybe this is a 15% correction, then you get around 460. These types of corrections, 10 to 15%, those are pretty standard, even in strong bull markets, right? I don't have the screen up now to measure all these prior ones, but back in 2024, when we had this kind of drop here in the Qs, this was approximately a 16% correction, and the market came back and it managed to make new highs and grind higher and find support. And so, when we start to think about these bigger levels, don't rule out the bigger correction, but let's first see if we can actually break down. Let's see if we can get below 495 or so. I think that's the trigger for a more severe correction. If we can stay above Friday's lows, then I think the carnage, the damage is at least contained for now, and we'll see if the market can kind of shuffle around other leadership groups and rotation to keep us afloat. All right, so that's kind of the read here on the market. Short-term technical damage, fake out, breakout to the upside, fake down breakdown on Friday from oversold conditions, from very poor sentiment. The macro is pretty poor, but earnings are still kind of in check here. They're not terrible, so we're going to have to weigh all of these cross currents. If we start to get more clarity on tariffs, if we could resolve conflict over in Ukraine, any of these things, government shutdown gets past us, right? Inflation continues to come down. Fed starts to perhaps change their tune a little bit. Any of these things would start to relieve some pressure, but we have to see. Right now, they're not giving us much to hope with. So that is the major market. Let's go to some of the others. So this is IEF. This is the 10-year Treasury bond. And you can see this chart is catching a bid here. And this is, again, the inverse of Treasury yields. So as yields go down, this chart is going up. You can see some of the volume that came in this week, and this is floating higher. We're back to sort of the December highs here for IEF. So we're a little stretched, but hey, right now the rotation into that safety is happening. The long bond TLT, take a look at some of the volume picking up here as well. This is finding a nice bid and things are moving up. That's good for mortgage rates. That's good for just business generally speaking, any of those indebted companies as well. Now, one thing that was not too strong this week was gold. Now, gold has been extremely strong over the past couple of months. So, look, it deserves a little bit of a break, but this was a notable kind of down move here. One of the worst weeks for gold in some time, down 2.76%. Again, on the year, it's still up almost 9%. So gold, again, is still something that is working in this environment. Pay attention to this pullback. And if you're looking to get into gold on a dip, you're starting to get that right now. Now, we are going to look at some momentum stocks, but let's take a quick look here at Bitcoin. So Bitcoin had all of the ingredients here for some volatility expansion. We talked about this tight sideways range. We talked about the compression here around 95,000, and this was very clearly either going to make another run to all-time highs around 107, or this was coming down into the sub 90s, and it's clearly we see that it's the sub 90s. This had basically 5 days of relentless selling, all the same as the Qs or tech or momentum trade. And we got as low as around 78K here in Bitcoin. So we saw a very fast 20% correction here. We did barely kind of sort of fill the CME futures gap that was around 78K in Bitcoin. Didn't fully fill, but we kind of got down there. But when we look here at IBIT right now, this is absolutely in the penalty box here. You got to really be careful on Bitcoin because yes, we are oversold in the short term and we can absolutely bounce for a couple of days, but this really needs to get over 51 in change here in IBIT. And basically, you know, you could equate that to essentially $91,000 to $92,000 in spot Bitcoin price. This is in the penalty box until and if this can reclaim this level. We finally got some exit signals here in Bitcoin right at the beginning of the week in our long-term trend following system. We've been in Bitcoin for a while, since prior to the election. And we've had a handful of good trends and profits in this, but we had to step aside. That breakdown was enough for us to say, okay, let's let the dust settle. Maybe we'll be back into this. Maybe we get a V-shaped bottom. Bitcoin is great at doing these V-shaped capitulations and then just off to the races. So in that situation, then we will gladly, you know, get back on board. And ideally it would be when there's some more technical proof that a washout has been in place and this thing can start to trend higher. So big move in Bitcoin here. Let's talk about some of these other things that have had big moves. And you know, Bitcoin is part of the story. If you look at the crypto market underneath the surface and you look at a lot of those other alts, I mean, some of those other layer ones and cryptocurrency meme coins or anything else are down, you know, 60 to 70% from their highs. So they've had some very fierce runs, very fierce sell-offs over the past couple of weeks. Now let's move quickly through some charts here. So NVIDIA reported earnings. We had this big bearish engulfing bar and then it kind of rebounded on Friday. Again, this seems like a big nothing burger here, just kind of sideways, choppy, consolidating. Weekly chart tells a better story. Maybe this turns into a topping pattern, but maybe it just turns into a continuation pattern 14 months from now. I mean, right now, it just doesn't look like there's too much trend behind it. There's volatility, but there's not a whole lot of long, medium-term trend. So it's just really nothing that excites me as a trader. Tesla was part of this momentum unwind this week. So this is down very quickly, 44% from its highs. We did do some buying in this. So I do have a long position, full disclosure, here in Tesla as of Friday or Thursday. Picked it up here at the end of the week, around 290 or so. So our short-term swing trading system, mean reverting swing trading system, has a position in this right now. So we'll see if we can get just, again, a little bit of a bounce. This is a good sell-off here. I mean, this is a pretty good washout. If you look historically, this is, you know, 6 days down, 25%. You can look at our rolling return screen here on some of these measurements to track how severe the selling is, but it's been pretty, you know, it's been a pretty good washout here in Tesla on multiple metrics. So we'll see if that's good enough for a multi-day bounce, but we have a position there. You could take a look at some of the, you know, some of the AI trades like IONQ. So again, this has been a hot place to be there. This started to unwind and unravel a little bit. You could look at some of the power plays like some of the small nuclear reactors, OKLO. I do have a position in this, but GEV, you know, some of these things, NNE, I have positions in a lot of these things that I was starting to buy, but these trades where there's a lot of kind of froth momentum and a story behind it, really came undone this week. Same thing with like an AppLovin. Again, you can see, you know, $100 plus billion company that had a 44% correction in 6 days. I mean, it's a pretty dramatic move. Once again, do have a position in APP as of late this week in our short-term system as well. It's been picking up a lot of the mean reversion kind of trash here after it got sold off our short-term system. So that's kind of the illustration there of what is out of favor. And now we will see, can these catch a bid? Can these return to leadership groups, or are there going to be other leaders in this market? Right now, consumer staples are working, financials are working, and Healthcare is starting to work again as well. So there are lots of things, maybe not as sexy as tech, but that are starting to work right now. So bottom line, lots of cross currents on the macro side. Short-term sentiment is extremely poor. We are oversold, and we did find some support at multi-month lows. So let's use that for now, but let's not be complacent out there. All right. So that's what I have. Thanks for tuning in. Lots to, get through this week, but it was an important week out there. Hopefully you made through it, and, and we're smarter and wiser from this trading week. Don't forget to check out IBD links in the description of this video and some of our own trading systems and downloads for TC2000. So that is it for me. Take care. Have a great weekend. We'll see you back here next week. Take care.